Ladies and gentlemen of the crypto space, we're live on a Thursday at 11:46 a.m., April 8th, and I am swamped today. I didn't even have a title for the stream, so today's topic is a shoot from the hip Q&A session. It's the best I got for you guys. I mean, there's a lot of stuff going on. I got a lot of replying that I've been doing on Twitter, obviously, and I got lots of great Twitter content going up. And obviously, Noah's office hours is off to a great start. We're helping people with one-on-one sessions nowadays, and we're going to make a difference. We're going to turn Main Street into smart money. No more fear. There's a path. There's information and explanation and reasons why these systems work. And it's quite a fascinating reality. And that's really what I want to focus on more and more nowadays is not about fear. It's not about hesitation. It's about systems that have properties. And these properties are navigable. And there's risk mitigation strategies. And there's insurance. And this is real, ladies and gentlemen. And traditional finance has no idea what they're doing in this space. Literally no idea. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam. Let's pop it over to the main screen and see who's in the stream. You got Ray in the house. Good day, Noah. Always a pleasure. Jay Nice-Mint. Salute. Brad's in the house. Always a pleasure. Lewis, title of today's stream is Noah is a Birdist. No, thank you for the kind words. I'm not the baddest of asses. I keep my head up and I keep moving forward. As I've told you specifically, the only difference between people is not falling down, is when you fall down, do you get up and try harder next time? Everything you encounter in life is a learning experience. If you lost money in a particular transaction, you learn from it. You move forward. You can't keep dollars. You can't keep your money in a bank account. That's the only way to lose. You have to take risk to avoid a guaranteed yearly loss of value. So the question is, how do you navigate that risk? How do you mitigate that risk? And there's plenty of options and choices and positions and strategies that can be executed. And you're sure as hell not going to be able to do that in the legacy financial system. Yeah, if you're crafty, you could use options and stop losses, and you can pursue yield-bearing products like REITs. You can invest in bonds. You can think you're going to retire based on bonds. Sure, bonds come into the picture for the contrarian ideologists that talk about a collapse or a liquidity event, and then bonds basically go vertical as the risk off play. But you get a bet on bonds because the bonds are going to go up in price? That's the stupidest perversion of a bond. The whole point of a bond was it provides you income. And clearly, bonds are currently useless. You're going to get 1.5%, 2%. You're doing nothing. A 2% bond is negative 13% on the year, considering what the general public sees as inflation. So inflation is a relative topic. I say this all the time. Inflation is relative to a particular market. So we clearly have significant inflation in consumer staples, probably to the tune of 10 to 15%, at least for 2021. Maybe 2020 also there was significant inflation, and it's real and it's powerful and it hurts. So no more of this CPI bullshit. If you're a general public, if you're Main Street, you're living with these things. So you have to take action, decisive action, to protect yourself. Because otherwise, the system is not going to protect you. They're going to say what they need to say to maintain control and order, is that everything is okay. But do you see everything okay in this chart? They don't talk about this. You go on CNBC, the headlines, they're talking about everything is booming, everything is up, NASDAQ all-time highs, Dow Jones all-time highs. They're full of shit. Look at this. Look at this. You're witnessing the utter collapse of the United States equities markets. This is devastation, destruction. You want to see how much value the equities markets have collapsed over the last year? The equities markets have collapsed 70% in value because they have printed that much currency. And sure, obviously, it's all relative, meaning the price dollar denominated goes up. So you're able to interact with consumer staples for your livelihood. But and obviously the debasement goes into financial instruments predominantly, and the banking sector, and it doesn't filter into the real economy, and then all those complexities of conversation that we've been seeing discussed about the fallout of the monetary policy and fiscal actions of the federal government. But this is a messed up chart, boys and girls. Anyone investing in the stock market is not outperforming monetary debasement. That is a true, factual, real statement. This is a picture that describes the absolute collapse of U.S. financial markets. Anyway, what am I missing in the stream? Jay Naismith, launch pads, friends or foe? Irrelevant. I have no interest. I don't do IPOs. I want established platforms. I'd rather make 5-10% predictable than take unnecessary risk. You want risk? I got risk. I have risk up on the screen. This is the biggest risk I'm taking right now, and I have a feeling when so my gut instinct is when Uniswap V3 launches, this thing is going to absolutely launch. So that's the name of the game. Um, T in the house, always a pleasure. Wave Mappers, put it in my 2 weeks today, accepting my new offer, plus crypto is green. What a good day. Look at you pulling yourself up, getting that new work. That's the way to do it. I've worked at maybe 10 jobs. You go on LinkedIn, you can see my entire work history. I think it's like 10 jobs over the last 10 years. I just you go to the next. A corporation will liquidate you and find a new employee faster than a couple of heartbeats. There's no. It's never business. It's only personal. What is that? Nino Brown says that in New Jack City. That's probably a great quote from an old school movie. It's never business. It's never personal. It's only business. So you find a job that pays more, you get the hell out of there. You owe them nothing. They don't owe you anything either, and they'll liquidate you and pull back the workforce and whatever. It's never personal. It's only business. Matt's in the house. Always a pleasure. Julie Young, how are you? Lewis, do you feel sell-offs, pauses in the crypto market is healthy, cost basis readjustments, healthy velocity rotation, and hopefully opportunity for new money? Well, obviously buy low, sell high, and people have a capacity to navigate that volatility. That means you have to be sitting in front of the computer. That means you have to be eyes on technicals. And, it depends on a person's time availability and interest in performing such activities. For myself, sometimes I play the game as such. I did that sure as heck pretty well in DeFi summer, 2020. But nowadays I'm swamped. I have one work over here, one work over here. I got to jump off this call and run over to Quest Diagnostics. I got two girls outside running around with their heads turning circles, and some contractors around the house, and a wife. I'm pretty sure I have to pay attention to her at some point. And so, man, I'm swamped, man. So I got no time for trading. What I have is strong positions. These are my favorite positions because I'm quite excited. They're speculative and there's risk, which means there's potential for immense profit. This X Token Cafe just tickles my fancy. I have 1 inch exposure, which just got a Coinbase Pro listing paired with Ethereum. So it's Ethereum denominated stabilization, not dollar denominated stabilization. And that we've talked in great extent about dollar denominated pairings and a double volatile pool pairing and what the difference is. So there is stabilization here. It just happens to be Ethereum denominated stabilization. I have a bit of an XTK direct position. I mean, this thing's cranking out 303%, N6B 378%. It's like based on the prevailing price of XTK, it's like $2,500 a day, give or take. I actually was always short on an Aave position. So yesterday I threw cash in, and obviously the markets are much more healthy today. So every Aave that I have, a small position, was from old school Len days. So I had old school Len back in the day, way before the significant appreciation of late 2020, early 2021. So this thing's earning yield, this thing's earning yield, all denominated in XTK. I mean, you guys got to understand this thing. This thing is a 13 million market cap uh, asset with 18 mil circulating supply. Until max supply, we'll see how that changes. Which has a, even at $1 billion, you're talking about a 700 and something $1 million fully diluted valuation, which is microscopic compared to the top 100 nowadays. And this platform is going to facilitate fungibility for Uniswap, a $17 billion a day transaction volume platform, and it's run around at 13 mil. Yeah, you put money in here and you get 15, 20, 30% dips. That's quite high. It's down high from the top. So you put 10 grand in and you're down to 5 grand. But these are the types of assets that make a portfolio. And the question is, how do you navigate it? Is this thing going to go for a full mean regression? I don't know. All I know is this is where I want to take some risk. I saw the falling wedge. I saw the breakout, but frankly, this is below this resistance line. Well, it was a support line, and now it's a resistance line. So support flip resistance is quite bearish, but it's still above the previous resistance of the falling wedge, which is interesting. It is heading in the direction of the long-term moving averages on the 4-hour, the 100 SMA, the 200 EMA are down below. It breached the 50 SMA, which you can see here in the green. So there's significant room for downside depreciation, which is why position sizing is what matters. This is a relatively moderate sized position, and this is 1 inch, which has been appreciating. Finally, we looked at the chart, we saw the big breakout. 390 was a recent low, and then the fours, and then it popped up to 5 after it broke out of its symmetric triangle. And obviously, we're bullish on Ethereum. So I've told folks for many months on the stream that I wasn't exposed to Ethereum. As of late, I have a decent Ethereum exposure. Now, the Ethereum exposure is there's pure Ethereum exposure in Curve, which is earning 35% interest. And I have Ethereum exposure on this pair, and this pair. It's a relatively large Ethereum exposure at this point. It's about 60% the size of my Bitcoin exposure. Bitcoin's about 25% of the portfolio. Ethereum is about 15% of the portfolio. So 25 for Bitcoin, 15% for Ethereum. So that's where I'm currently at. So, truthfully, I'm a little uncomfortable. I am overexposed relative to the way I really want to be. So for my comfort level, I want the vast majority of capital, actually, probably greater than 50% in dollar denomination, which would be in Curve. So I just, I'm taking risk. I'm feeling bullish, and bullishness could come back to bite you, and I could lose a fair amount of value if the market turns south. But on the contrary, without risk, there's no reward. So I encourage everyone to always have a significant portion of their portfolio in dollar denomination. At this point, I am 18% dollars. So I was up at like 35, 40% dollars at one point. I'm about 18% US dollars in the crypto space, obviously, predominantly Curve, some in Bancor, and that's just the way I'm running it right now. A lot of risk on the table to put 82% of your capital in risk on position. So I'm uncomfortable, but I have to. You only live once, and you give it a shot. So that's what I'm currently doing. So that's the name of the game, Lewis. Yeah, everyone has to define their risk tolerance, and right now I'm right in the line. My risk when you have too little risk on the table, you're like, all right, I'm not making enough, but you're comfortable and that your value is protected. If you're taking too much risk, there's my monitor. Okay, it's back. If you're taking too much risk, then you're really uncomfortable and you can't sleep at night. So you have to be able to sleep at night knowing that value that you have is protected, but you also have to take risk in order to grow a portfolio. So it's not easy. It's really complicated how to play this game. But it's the most important topics that I could discuss, how to teach people that you are taking a risk. You can't gamble. You have to protect your value, but you also, on the other hand, you have to take a risk in order to make gains. So everyone's going to have their own individual balance to how they structure the portfolio to do that. Find your balance, and there's no perfect balance. There's no such thing as a perfect balance, ladies and gentlemen. a lot of gut instinct, a lot of sentiment, a lot of feeling the market and respecting the way you feel. So the first step is to understand how you feel. Barry's in the house. Hi, all. What do we got? Hey, guys. Elton? 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 My man. I'll get it right. If I got it wrong, maybe I got it right. Thank you, my friend. John's in the house. 1 inch all-time high end USD charts. Bam. Well, that's good to see. It's a healthy 1 inch position. I think that's the third. What do I got? Oh wow, 650. I put like 24 grand at the 1 inch, and now it's 38. Magic money machines. I wish yeah, I've put big positions at times with 1 inch in there, 1 inch USDC. Man, I think I had like 200 grand worth of 1 inch at one point, but yeah, I didn't play it the same way this time. Now I'm going to take the long game and I'm going to play the X token because you're talking about like a month and a half for Uniswap V3. And this asset's run around a 13 mil market cap. You could go 10x on the money and you got 130 mil. And if and then if you go, I don't know about 100x on the money, but you could easily get like 20, 30x on the money, and that'd be crazy. Ooh, that'd be crazy. That'd change this portfolio. Um, can you enable the watermark on charts? I'm stuck running the rat race welding, so I'm watching on my phone. The watermark? What do you mean watermark? I'm sorry. I mean, there's not much technicals I'm going to look at. In fact, I got to wrap up the stream soon. I got to run over and get a blood draw. Um, but these are the only charts we're really going to look at, just highlighting the sheer and utter destruction of the broad equities market denominator in M1, touching on the technicals of XTK. We can look at BTC USD divided by M1. So, we're looking. You see in the background right there. You see the destruction of the equities market, and then you pull a Bitcoin denominated in USM1, and you have outperformance. Look at this. Look at this on the weekly, where we're not even going into oversold. This looks like a rounding bottom on the on your Stoke, and there we go to where I prefer to look for our biggest macro narratives, the monthly. We didn't even breach 70. We didn't even breach 70. So notice these two highlighted circles is kind of what I see. We got a pullback before the breach of 70, and then basically you got the Cambrian explosion where RSI in the monthly starts to rip upwards towards 100. And it only happened twice in the technical history of the asset, back in 2013 and 2017. And the 2019 bump didn't hit RSI heights, but only two periods in history, and this is basically the cycle we're in now as a result of the halving and the supply disruption. So this whole cycle is barely getting started based on this chart. It's barely getting started. How about that? Isn't that fascinating? That's what this chart shows. That's what this chart shows. Is TA still effective when projects have such high token emissions rates? Of course. But I prefer to think about fundamentals and allocating value as such. But when you talk about tokens, what kind of asset? Are we talking about an asset with actual monetary velocity? Are we talking about an asset with supply disruption and deflationary pressures? So if you got a token emissions rates is an inflationary component. What you have to do is understand the monetary policy of the asset you're interested in. If you got some stupid asset that's just like an ICO from 2017 and they basically just have inflation, it's going to debase. The value is going to get screwed. It's going to plummet. So what powerful technologies like Bancor has is an inflationary component coupled with an extremely strong deflationary pressure, the vortex. That's very strong deflationary pressure. What they have is a stable monetary policy, which is basically their manifestation of a fiat currency. And that's what's novel about what's going on in DeFi is really these DeFi protocols are creating fiat currencies. Historically, that was for sovereign countries to do, but that's what's occurring in the DeFi space. Fiat currencies, digital, blockchain, monetary policy, inflation, deflation, and all the stuff that we talk about when we're talking about currencies. So the funny thing is, traditional finance has just no idea what they're talking about. Bitcoin is not a currency. It has no monetary velocity. If you want to lend and borrow using it, basically you're accessing the equity in the Bitcoin. But when you're talking about a currency, that's everything that's being created in the DeFi space right now. Anything that has a monetary policy, a capacity to lend and borrow, inflation and deflation is the hallmarks of a fiat currency. That's crazy. It's awesome at the same time because we're talking about this stuff and they are traditional finance is saying, where does the yield come from? How does it work? It's all going to zero. Yeah, if it's not. Monetary velocity is what sustains an economy. And right now, the monetary velocity in the DeFi economy is vertical. The lending and borrowing is vertical. The creation of value is vertical. The creation of value in the legacy financial system is imploding. Look at this chart M1 denominated Bitcoin versus NASDAQ. Come on. Bitcoin is outperforming M1 debasement. NASDAQ has been destroyed. It's basically been obliterated. There's nothing left to it. I mean, seriously. It's crazy. Folks talking about a bull market in the equity space. It's down 70%. It never recovered from March 2020. It has been destroyed. Albeit, all right, fine, I'll give him this. You got a serious rounding bottom on the MACD. Stoke is finally coming out of oversold. You know what the funny thing is, and Lewis and other technical folks who could appreciate, the Fed often talks about 2021 being an extreme bull market, and it's just getting started. You know what I'm saying, Lewis? Look at this RSI. Look at this Stoke. Look at this MACD. You know how kind of messed up it would be with the markets at all-time highs, and these technicals suggest it hasn't even started yet. The bull market hasn't started. That's crazy. Could you imagine equities markets just doubling in value? And guess what? They'll double in value and they'll barely be above the long-term moving averages. So you won't be at all-time high M1 denominated. You'll barely be getting to bullish. Right now, you're not even in recovery yet. I mean, seriously, look at that. Gains to 100%. That's 100%. So literally that'll put whatever the markets are at, double them. And you're still barely bullish because bullishness is a retest and then the higher high. And the higher high will put you at 5. So so you can see the equities markets might actually just be getting started. And as Raul said, which really gives me a lot of insight when I look at markets and M1 denominations, change the denominator. If you're looking at things in terms of dollars, it means nothing. The dollar has increased in quantity tremendously. If you're looking at things in terms of M1, the recovery has barely started for the equities markets. Crazy. X token AB difference. Yeah, look at the monetary policy on the X token market. You can get the details there. X token.market. And you'll see the difference. Listen, just because I'm talking about these assets does not mean it's an endorsement or a recommendation. Everyone, you do your own due diligence. It's your own responsibility. I talk about them because it's what I'm doing, and it's for you guys to consider. Because I happen to think I like these assets, and I think they're powerful. These are auto compounding. They turn yield bearing assets that produce APR into APY, or compounding 1inch, auto compounding Aave, Synthetics, and Kyber Network. So it's pretty awesome stuff. JD514, many of the DeFi projects you invested in last year have Moon. Would love to know what you'd invest in now, starting out now, that give amazing yield on speculative tokens, room for growth. Listen, if you're starting out, that's worth an entire conversation. Jump on Noah's office hours. You'll find the links on Twitter, and we could talk about it. Just starting out is you have to consider risks. I mean, if you got like $1,000, $2,000, you're not necessarily. It's not easy to turn that into $20,000 unless you're taking excessive risk. But when you're dealing with $1,000, you could easily get obliterated. 20, 30, 40, 50% drop in a particular asset, and you're going to lose half your money. With $1,000, you're not going to want to have 10 different assets, 5 different assets. You're not going to want to get 30, 40, 50% on your money. As you get $500 a year, it's not going to get you anywhere. So you have you have to do what larger portfolios do with small portions of their portfolio. Take very large concentrated risks, and that concentrated risk is a relatively high risk because you're doing it with the vast majority of your portfolio. It's a conversation to be had. I'm more than happy to help with the risk considerations. Age is a massive factor. If you're employed and you got income, you can afford to take risks, and really a risk is a forced course of action, because if you don't take a risk, there's absolutely no future. You're not going to get anywhere working. You'll never be able to save for retirement. You'll never be able to save for a future. You'll never get ahead. You can't do it with a bank account. You can't do it with treasuries. You could gamble in the stock market, because as we're looking here, this bull market may actually barely just be getting started, which is a very scary thought, actually. But for me personally, I prefer the crypto space where risk offers 30 to 40% interest. Bing, bada boom. Right, Sam? Isn't that crazy? Bitcoin's not just getting started. Bitcoin is significantly outperforming the debasement and the M1 denomination. But the broad equities market, this chart right here says NASDAQ is barely getting started. It didn't even hit a bullish MACD signal cross yet. It's barely out of oversold on the Stoke, and RSI is just coming out of bottom. That's scary yet interesting simultaneously. What was bearish on 1-inch PA due to emission rate, but they came through. So emission rate isn't the only thing to look at. You got to look at how much is being locked in the protocol. So I mean, look at this. The interest has been uh, uh, has plummeted because people are locking their tokens for part of governance. So that's supply disruption. People are locking their 1-inch tokens in here. People are locking their 1-inch tokens in the farm positions. So those are supply disruptions. So my friend, you were looking at the emissions rate and the inflation. What you need to also consider is the deflationary pressures. I mean, there's literally 50 million, 50 million, 85 million. There's a lot of 1-inch assets that are removed from circulating supply that are participating as liquidity providers. And that's the truth. Inflation and deflation, the part of monetary policy and its monetary velocity, that is why these assets are so powerful. My man. Well balanced. Thank you. All right, I'm going to wrap this up. I got a couple of things to do. As always, I thank everyone for joining me. 30 people in the stream, 14 likes. We can do better. Thursday, April 8th. Tell everyone to subscribe. Thank you very much. I will see you tomorrow. Peace.